finances, investing, estate and retirement planning? Well, I went to school, so you don't have to. Welcome to Finances and Child Tax Credit. Finances and, in conjunction with Capital Coaching, helps people achieve their financial goals through personal, tailored, and attentive financial coaching services. We create successful financial plans by examining your spending and saving habits, and then guiding and educating you to your own personal success. Our coaching services include evaluation of your spending plan or budget, building your savings, financing your retirement, examining your insurance needs, and planning for your individual goals. Please contact me at capitalcoaching.net to make an appointment for a free consultation. In the questions, episode number 3, we mentioned the child tax credit, but since I've been getting a lot of questions about it, I thought I'd go into more detail today. The American Rescue Plan, a $1.9 trillion rescue plan, provided many forms of relief from the COVID shutdown. For vaccines, the $1,400 per person checks that we received, unemployment extensions, earned income credit for income tax, tax credit for childcare costs were also included. Those are some of the things that were put into action to help the economy. The child tax credit was also put into place, and it is continuing through this year. Over $15 million has already been sent out to families of over 60 million children. Those eligible have returned their 2020 tax returns. They have children between 0 and 17 years old. They have met income threshold requirements as well. Even if you did not owe taxes last year, you must have filed or filled out the IRS's non-filers tool last year. This tool is for those experiencing homelessness, and they can file with their name and social security number. Those payments that people are receiving are an advancement on their future 2021 returns. That means that the eligibility could change if you made more income, and I'll talk a little bit more about that in a moment. That means their eligibility could change. An example might be someone who did not have a job in 2020 and then, of course, had a lower income because of it. They might find that they have either no longer qualify or receive less in the credit due to their 2021 returns if they have joined the workforce again. So to receive the credit, your adjusted gross income, or AGI, must be less than $75,000 for a single, $150,000 for married filing jointly, or $112,500 for head of household. You can go into efile.com to check your eligibility for all of these. Your AGI is not your annual income. It's calculated by taking all the income you've earned through your job, a side hustle, maybe retirement distributions that you took, or capital gains, and then subtracting things like if you're an educator, you could subtract up to $250. Maybe you have student loan interest. That would be something you can deduct. If you have made contributions to your health savings account, or if you've made contributions to your retirement accounts, that's how you're going to come up with your AGI. That means that the more money that you put into your retirement accounts, the more you'll have at retirement, and the less you'll owe in taxes now. Win-win. If your AGI is greater than the $75,000 or $150,000 that I mentioned earlier, you may still receive a tax credit benefit, but it will be less. So to receive the full credit, which is $3,600 per child, which works out to $300 a month, and that's from birth up to 6 years old, or $3,000 a year, and that works out to $250 a month for those aged 6 to 17. Those whose AGI is $200,000 for a single or $400,000 for married filing jointly can still claim up to $2,000 per child, which would work out to $166 a month. You are still eligible up until your child turns 18 years old, but any money you receive after they've turned 18 will be owed back to the government. However, they're just going to take it out of next year's refund or include it in what you owe at tax time, but you won't actually have to write them a check for it right now. If for some reason you don't want the credit, or your child turns 18 and you don't want to worry about next year's taxes, then you can opt out at the IRS's Child Tax Credit portal. You have to opt out by 11:59 p.m. on the dates following to skip the credit. So for example, if you don't want the August 15th payment, you'll need to let them know by August 2nd. If you don't want the September 15th payment, you'll need to let them know by August 30th. If you don't want the October 15th payment, let them know by October 4th. If you don't want the November 15th payment, let them know by November 1. And if you do not want the December 15th payment, let them know by November 29th. Those people who are going to have a baby in 2021 are eligible as well, so make sure you're changing your dependents on the IRS website once your new baby has arrived. If you choose to opt out because you think you won't qualify and then you ultimately do, you can still take the credit on your 2021 return. Instead of waiting until tax time to receive a lump sum, the Act allows families to receive money monthly around the 15th of each month. And this is done by depositing into your account on the information given when you did your 2020 taxes or by receiving a check. The direct deposit option is quicker than getting a check, so make sure your banking information is up to date on the IRS website. This tax credit means it reduces your tax bill dollar for dollar. The credit is refundable, which means that you may have your taxes reduced to zero and then even get a tax refund. But this is all based on your tax situation. It's different than the stimulus checks where you might have received money last year, that $1,400, and then were taxed on it in April as income. Since you'll only receive 6 months of payments, the July through December in 2021, you will still get the other 6 months up to $1,500 credit on your taxes in April, unless you were to opt out, and then you would get the full $3,000 credit in April. The Columbia University Center on Poverty and Social Policy estimates that the American Rescue Plan can lift 5 million children out of poverty, cutting the children's poverty in half in the United States. For that to happen, you need to register with the IRS. The Act's ultimate goal is to get children out of poverty. The proposal to extend this act past 2021 to 2025 has not yet been approved by Congress, but that is something that they're looking to do. I've included a brief explanation of all of this here in the show notes today, so feel free to grab them. Thanks for listening to Finances and the Child Tax Credit. We know you chose to listen today and we're grateful. If you enjoyed this episode, please follow or subscribe for free in your podcast provider and share your favorite episode with a friend. Finally, consider leaving a review because it brings financial education to others and helps people find us more easily. Please let us know what questions you'd like answered or any topics you'd like to cover by going to the website at financesand.net and leaving a message. You can also contact Capital Coaching for your personal financial needs at capitalcoaching.net. Finances and does not provide tax or legal advice, and nothing in this podcast is to be construed as such. Always consult a tax, accounting, or legal professional for advice on your specific situation. Remember,